Harmonic Trader Education, Harmonic Trading, Certified Webinar Series. Lesson 1. What is harmonic trading? What is harmonic trading? Harmonic trading is a technically based approach to define opportunities in the markets, employing the recognition of specific price structures which possess distinct and consecutive ratio alignments that quantify and validate harmonic patterns. These patterns calculate the Fibonacci aspects of each price structure to identify the natural, reactive, reversal points in the financial markets. Harmonic trading respects the natural phenomenon of cyclical movements. When related to the market, harmonic trading analyzes natural cycles of growth, buying, and decline, selling. Who is the harmonic trader? Harmonic trading is a methodology that I discovered in the 1990s. I originally defined the primary rules of the approach in my book, The Harmonic Trader, in 1998, and I coined the phrase harmonic trading. I've since written 2 more books, Harmonic Trading Volume 1 and Harmonic Trading Volume 2. These books have advanced the principles presented in the first book to define a comprehensive methodology for trading the financial markets. Order within the chaos of life and the markets. This methodology seeks to identify cycles of trading that are manifested as quantifiable price patterns. These phenomena, similar to examples of patterns in nature and cycles of life, continually repeat in the markets. These price structures can be measured and distinguished to define high probability opportunities in the financial markets. Who is Fibonacci? Leonardo de Fibonacci di Pisa is his full name, and he was an Italian mathematician that was responsible for many important discoveries in the field of mathematics, including the Fibonacci sequence and the arithmetic numeric system, an advancement of Roman numerals that were the predominant script for denoting numbers up until this time. Origin of the Fibonacci sequence. Fibonacci's numbers are based upon a theoretical problem to mathematically quantify growth cycles of rabbits. The mathematical problem that Fibonacci proposed was the following. If a newborn pair of rabbits requires 1 month to mature and reproduce at the end of the 2nd month and every month thereafter, how many pairs will one have at the end of n number of months? Well, the answer is u to the n. This is based on the summation equation of u to the n plus 1 equals u to the n plus u to the n minus 1. It's exhibited and demonstrated in the following series. The sequence of Fibonacci numbers is as follows. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, so on, all the way to infinity. It starts by adding 1 is the first calculation in the numeric series. The calculation takes the sum of the 2 numbers and adds it to the 2nd number in the addition. The sequence requires a minimum of 8 calculations. Deriving the golden ratios. The sequence requires a minimum of 8 calculations, that is, using the number 34 and 55 in the sequence to equal 89. This 8th iteration, or 8th calculation in the series, demonstrates certain particular ratios. 34 divided by 55 equals 0.61818, or an approximated 0.618. The inverse, 55 divided by 34, equals 1.6176. Again, another approximated 1.618. Looking at the ninth iteration, we see similar results. Now, this summation and all others up to infinity beyond the eighth iteration will exhibit the golden proportions of approximately 0.618 and 1.618, which are manifested in a variety of natural growth cycles, including the markets. Why? Why did this work? For trading purposes, though, these relationships, when applied to the financial markets, can effectively analyze similar growth patterns in price action quite effectively. However, it's not important to get caught up in the why-type questions that undermine the application of these methods. Rather, it's important to respect this phenomenon and master the discipline that such perspective offers. As W.D. Gann proclaimed in his book, Tunnel Through the Air from 1927, I have always looked for causes, and once I determine a cause, I can always be sure of the effect of a future event, which I predict. It is not my aim to explain the cause of cycles. Patterns in life. Any natural phenomena that can be quantified and measured, manifesting a chartable frequency, which can be plotted, will typically possess structural patterns with Fibonacci-related ratios to define critical extreme constraints. Some examples are cardiograms, beats per minute, radio waves, kilohertz per second. Pretty much any measurable activity per time unit that can be charted will exhibit these type of harmonic patterns. Let's look at some examples. Here we look at a random chart of a cardiogram. Within this chart, we have a variety of harmonic patterns that naturally manifest themselves. We have a shark pattern, a crab pattern, and an 886, a bullish bat, a reciprocal ABCD, and even a bearish Gartley. This is an interesting chart. It shows decibels per km attenuation. Now, attenuation is a big word for meaning the gradual loss in intensity of any kind of wavelength through a medium. But this too, despite the downtrend and the attenuation, exhibits many harmonic patterns. The first pattern is a bullish ABCD. The second pattern, a bearish bat. Third pattern, a bearish Gartley. And finally, yet another bearish bat, a bullish bat. But this is probably one of the most interesting charts that exhibits harmonic patterns. This is tweets per second from the 2011 Super Bowl. Quite interesting. But are there harmonic patterns here? Absolutely. During the halftime show, we saw a large rise in the number of tweets per second, and this structure throughout the halftime show exhibited a bullish bat. Now, after the pattern completed at the correct area, the number of tweets per second accelerated and reversed, culminating in the high of a touchdown by the Steelers. On an even longer-term scale, throughout the entire game, we see a bearish Gartley right at the peak at the halftime show. And then finally, towards the end of the game, yet another bearish Gartley. Fibonacci phyllotaxis. Fibonacci phyllotaxis is the study of discernible growth patterns in plants. A survey of 650 species of plants containing 12,500 specimens that displayed spiral or multiple phyllotaxis patterns estimated that about 92% of them exhibited Fibonacci-related traits. This is essentially just yet another example of nature exhibiting Fibonacci traits in its growth cycles. Human body. The human body demonstrates many golden proportion relationships, 618, 1618, derived from the Fibonacci sequence. In fact, many works of Leonardo da Vinci, the fascinating proportions of the human body have been illustrated. For example, the proportions of the hand possesses phi ratios, starting from the tip of the finger to the base of the wrist. The palm is approximately 6.18% of the entire hand. DNA molecules. DNA molecules measure 34 angstroms long by 21 angstroms wide for each full cycle of its double helix spiral. The numbers 21 and 34 are the 7th and 8th results of the Fibonacci sequence respectively, and they too possess golden proportions. Astronomic examples. Venus, for example, takes 225 days to complete a revolution around the Sun. As we all know, the Earth requires 365 days to complete one revolution. If you divide 225 by 365, the result is approximately 0.618 of a year, and its inverse is approximately 1.618 a year. Very interesting. Harmonic phenomenon related to the markets. Now, the key is to identify complex cyclical situations with phi and phi-derived ratios that pinpoint discernible segments of price action. Fibonacci-derived ratios define the natural levels of support and resistance that can be anticipated. Applied to the markets, these measurements consistently define trade opportunities and outline repetitive technical relationships that offer a great deal of information regarding the future price direction. Harmonic trading and wave theory. Harmonic trading employs wave theory principles to focus on the combination of ratios within various price waves and precisely measures the natural cyclical flexion points within relative segments. Harmonic patterns themselves are uniquely defined wave structures. But harmonic trading is different than other wave theory approaches, for instance, Elliott wave. The ratio alignment of harmonic patterns is essential. Each pattern must employ different rules depending upon the structure. The most significant point in all harmonic patterns is the midpoint at B. The ABCD component of all complex patterns serves as an important minimum requirement to validate a trade signal. The strict rules to validate structures as harmonic patterns improve success rates and optimizes consistency. Measured moves. Harmonic trading is about measuring all relevant price possibilities to limit possible outcomes and create a realm of certainty. This approach employs harmonic ratios to measure where price action has been and where it possibly can go. Each situation is measured to gauge the readings of the technical condition of the perceived opportunity. All actions are defined in advance. Harmonic patterns equal technical events. The collection of measured moves defines the situation and facilitates analysis to interpret specific technical events that can be anticipated. Harmonic trading effectively defines the critical action spots within the trend that can indicate the future potential direction. It's important, though, to remember the patterns are temporary technical situations that require more of an active approach to optimize these opportunities. Also, harmonic trading employs a defined skill sets, a trading plan, if you will, that must be satisfied to signal any opportunity. Applying harmonic trading. It's important to know that this approach works on all time frames in all markets. Harmonic trading recognizes the stages of the trading process, and they're the same regardless of the time frame. Now, if you're looking at an intraday situation versus a daily, it's important to remember that you have less time to react, but the principles remain the same uniformly. It's best to start with longer-term situations to fully comprehend the dynamics of price action from a harmonic trading perspective. It's also important to review short-term examples to understand the limits of the patterns, profit objectives, and stop-loss determinations. Remember, this takes some time, and it's best, again, to look at longer-term time frames, such as daily time frames, when you're initially studying these methods. 3 steps to harmonic trading. There are 3 primary steps within the harmonic trading approach: trade identification, trade execution, and trade management. Trade identification. Regardless of what type of trading system is employed in the financial markets, the initial step is identifying a potential opportunity. Harmonic trading techniques utilize historically proven and repetitive price patterns that capitalize on consistently effective trade signals generated by the market's technical price action. It's important to understanding the differences among the various harmonic patterns as an essential step in order to capitalize on specific trading opportunities. Remember, 80% of all mistakes are eliminated through the proper identification of market signals, that is, harmonic patterns. Trade execution. After accurately identifying a potential trade opportunity, the actual execution must be determined. Several considerations must be assessed within a specific time period that is defined by the potential opportunity. The validity of the pattern must be determined, and the final action of executing the trade or not must be considered. Trade management. Harmonic trading employs precise rules and guidelines to optimize the management of a trade after it has been executed. The harmonic trading management rules seek to reduce risk and improve results by employing specific and quantifiable price levels that guide decisions until the position has been closed. The harmonic trade management system relies on the same measurement principles as the identification rules do. Avoid analysis overkill. It's important to remember that one can spend a lifetime studying the financial markets, but the key is learning the tools and strategies that really work. This approach has been defined and developed to analyze and distinguish only the most relevant technical information to define trade opportunities. Harmonic trading employs specific strategies and measurement techniques that reduce irrelevant information. When it comes to trading, we can only use what can be used. That is, use what works and discard what does not. Thus, it's important to avoid analysis overkill. So what are the tools that we use within harmonic trading? Harmonic trading analytical tools are as follows: Fibonacci and harmonic ratios, price patterns, trend channel analysis, price bar candlestick analysis, that is, looking at price action, relative strength index. That's one of the primary indicators of all of the measures within a technical analysis that we use. It's primarily relative strength. There are other considerations, though, such as volume, volatility bands, and time and sales records. But these principally make up the harmonic trading analytical tools. Preparing to see the harmonic picture. It's important to know right from the start that you got to prepare in advance. Preparation is the key for harmonic trading. It's also important to know that trades will be missed, so if you miss an opportunity, let it go. Look for the next one. When you're learning harmonic patterns and harmonic trading, use 20/20 hindsight. That is, thorough review and study of past chart examples and future setups to complete your analysis and fully comprehend what the harmonic trading signals are saying to yourself. But know that you're going to expect progress. You'll advance through this learning curve as these signals become clearer. The harmonic trading plan. It's important to create a trading plan that defines all actions in advance, and harmonic trading does that. Realize success depends upon the system, not employed, not the person. All aspects of the trade are determined in advance: the entry, the exit, stop loss. These must be quantified to guide the decision process. The harmonic trading plan must be frequently reviewed to optimize performance and ensure consistency. Most important, the harmonic trading plan is your roadmap to success. Self-discipline. Preparedness. Do the homework. It's so essential. With harmonic trading, there is a degree of preparation that is required so that you measure your opportunities and understand what the market signals are telling you. All actions are pre-planned according to a defined strategy that is geared toward success. Every opportunity will allow plenty of time to capitalize on the situation, so no chasing. Be patient for those setups to complete. Most importantly, though, limit the outside influences. External influences engender self-doubt. TV reports, news, other traders. But who knows better than you? So follow the plan, stick to your own work, and maintain self-discipline. But this gets in further to self-reliance. Trading can be a lonely endeavor. There's no competition in trading. It's only you versus the markets. So you got to support yourself. You got to be your own coach. Recognize your natural strengths, your weaknesses, and personal limits. But look to constantly improve yourself. This constant improvement required is essential for harmonic trading. Don't rest on success. Continue to improve upon your work, but go with what works for you best. Harmonic trading employs a plan, a trading checklist, if you will, and it's summed as the following. Is there a pattern? What is it? Is there an ABCD? Where does the pattern complete? Are there 3 or more numbers converging in the potential reversal zone? Well, what are they? What are the time cycles, the symmetry of the pattern suggesting? Are the harmonic trading confirmation signals, price action in the potential reversal zone, RSI BAM, volume, time and sales, are these valid at the pattern completion point? Are there any warning signs, extreme price movements at the potential reversal zone, prior gaps, or a low close or high close that might deter you from executing the trade? At what point is the potential reversal zone no longer valid? That is, what's the stop loss? Got to define that one in advance. How much must I risk, and am I willing to risk it? These are all important considerations, but again, this is the trading plan that defines your actions in advance to guide the trading decision process. Anticipation versus expectation. You can only profit from that which you anticipate. An old friend of mine used to say that to me all the time, and it's very true with harmonic trading. You got to anticipate the defined harmonic trading realm. Again, all price parameters are measured in advance. Defining a complex set of conditions to capitalize on known price segments creates realistic expectation of what can happen. Know when not to trade. Understand that you must wait for situations to materialize as anticipated. As I said before, don't chase, be patient, wait for your setups. Expect, though, the natural ebb and flow for all price movements. Nothing goes straight up or down. So you'll get your opportunities. You'll get the patterns to materialize, whether or not it might be occurring at the moment you're looking at a chart. It's important to be patient and know that price movements do ebb and flow and form patterns constantly. Anticipate reactions according to the prevailing ratios of each situation as well. Again, this all gets into following your plan and anticipating the markets according to the plan, not jumping on emotional decisions or reactions. Conclusion. This is really important. This is the beginning of your harmonic trading journey. You got to know this. You got to prepare to be an exact trader. As I've said throughout this webinar, we're going to measure all trade parameters in advance. We plan our trades in advance, and we review results, determine our strengths, and expose flaws to achieve consistent success. It's important to challenge old limiting beliefs through harmonic trading strategies as a means of identifying patterns in the markets and becoming aware of distinct cyclical behavior. Respect harmonic trading through the distinct natural relationships of the market. Harmonic trading requires effort. Follow the markets the same way an avid fan follows a sports team. But always think of yourself as a professional trader because this is serious business. Ask questions. If you're not questioning the process, you're not integrating it to the degree required to learn. So question what's going on. But always know your effort will pay off because persistence always pays. It's not a matter of if, it's when. So expect success. If you are persistent, you stick to the plan, you learn the rules, you will realize success.